I'm Sarah Borkson-Keto here in San Francisco for NAREIT's REIT World, our 2018 annual conference. I'm joined today by Arlen Nordhagen, Chairman and CEO of National Storage Affiliates. Welcome, Arlen.
Thank you.
So NSA announced a transformational acquisition earlier this year. Can you talk about how the Brookfield portfolio acquisition will impact the company going forward?
Yes, one of the biggest things that it does is it increases the number of properties that will be managed under our internal management company, the iStorage Management Company. That will increase that size to be actually the largest of all of our pro management companies. So about a third of our properties will now be managed internally by the NSA management team. And that gives us the scale that we need on an internal basis to continue to add portfolio tools, platform tools that we can perfect and then roll out to the pros as we see more scale economies.
And shifting to fundamentals, are there any markets where you're seeing particularly sharp imbalances?
We are seeing a number of markets nationwide that have been overbuilt, or we see supply growing faster than demand. Demand is growing well pretty much everywhere, but a couple of the worst markets in the U.S. are Nashville, Tennessee, and Portland, Oregon. Fortunately for us, we don't have much exposure to Nashville, but we do have a substantial exposure to Portland, Oregon, which is a very strong market, but the supply growth there has been more than double the demand growth in the last few years. And so that's really putting pressure on that market. Obviously, when we see supply growing faster than demand, occupancies are pressured, occupancies drop, puts pressure on rates, and that makes it very difficult to grow same-store revenues. Fortunately for us, we have more good markets than bad markets, but there are several markets across the U.S. where supply has grown faster than demand, and that's what you hear a lot about in the news. But we're happy with our performance in markets like California and other strong markets where the supply has been growing at a slower pace, so it's more matching demand.
And you mentioned same-store revenue. How do you see that trending for the rest of this year and into 2019?
Well, we're certainly not at a position to give guidance for 2019 right now, but I can give you some hints based on what we have said about our 2018 guidance, and then also talk a little bit about the history in the industry as we look back over the years when we saw supply growing faster than demand. So first of all, as it relates to our guidance for this year, we've publicly stated that our same-store revenues and expenses will grow toward the low end of our guidance range, which will mean that our NOI growth will be right comfortably within the range. So that's positive, since where we've gone through the first 3 quarters, we would see that means in our implication would be we've kind of leveled out into more of a level number now, rather than seeing continual declines. The question then becomes where is that going to level out for the whole industry? And I think we're pretty much at the level we're going to see the industry level out pretty close to where we are now. When we look back over the last 25 years or so, about half of those years we saw supply growing faster than demand, and in those years we did see same-store revenues growing only at about 3.25%. But in the other years, when supply was growing slower than demand, we saw same-store revenues growing at about 5%. So based on history, it would seem that a good guess of where the industry will stabilize is somewhere close to that 3.25% same-store revenue numbers right now, as we're seeing excess supply. Obviously, individual competitors, individual markets will vary of where they are within compared to that average, but I think that's a good overall average, and we're very pleased with where NSA sits in terms of the markets that we're in, and we think we'll do pretty well relative to that average.
Great. Thank you so much, Arlen.
Thank you, Sarah.
And for more from REIT World 2018, be sure to visit REIT.com.